Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're going to take a quick look at dollar yen because it has certainly been the most interesting of the major G10 currency pairs on the week so far. That's because it's very much been on the move. It's seen a big breakout to the upside. So let's look at the chart here. I've got dollar yen on one-day candlesticks, and you can see that yesterday on Monday we had this big push higher where we rallied from the low 112s all the way above 113, and I mean basically this morning we've nearly hit 113.50. So for dollar yen, that's a pretty big move to have in one day. You don't often see one-day moves as big as that. I mean, I don't even know when the last move that size to the upside happened. Maybe back in May. But anyway, we have to zoom out and go back quite a long way to see the last time dollar yen was at these levels. The last time it was at these levels was in December, mid-December. And you can see that we've broken through key areas of resistance here, dating back to March and May 2019, then again at the start of the pandemic in February 2020. This 112, just above 112 area was a key area of resistance that we've now burst above. And it looks as though we're now going to be within this new range, okay? So just quickly before I go back, the top of this new range is a well-established area of resistance between around 114.50 and the 1500 level, okay? We've got multiple touches: October 2018, November 2017, July 2017, and May 2017. So these are very long time ago, these levels of resistance, but they're important nonetheless. So yeah, now this looks like this is going to be dollar yen's range. Perhaps we see a bit of profit taking, a bit of a pullback, but likely to find support around 112, and then perhaps we get a push on towards the top of the range, yeah, around 114.50 to 11500. That is probably what things are going to look like. But why has this happened? Why has dollar yen seen this quite extreme move to the upside in recent days? I mean, actually, it's not just the last couple of days. This move has been going on since the 22nd of September, which is actually the date of the last FOMC meeting. So what's been going on? Well, a couple of things. I mean, really, the main driver you've got to say has been a sharp rise in US bond yields, which typically you don't see Japanese bond yields move at all because of the yield curve control policy of the Bank of Japan. So when US yields rise, you see a widening in US-Japanese rate differentials, which basically attracts money flows from Japan into the US because people want to go where they're going to get a better return for their cash. So we've seen significant upside in US yields. Why have we seen that upside in US yields? Well, obviously the September FOMC meeting was hawkish. Those dot plots were very, very hawkish. It was like taking FOMC members thinking that rates were pretty much going to have moved to not far off 2% by the end of 2024. That's some hawkish stuff. That was much more hawkish than markets were expecting. So that's been a reason why real yields have moved higher, but nominal yields have been boosted by the rise in real yields, but also by all this focus on and fears about inflation. That kind of centers, the center of those fears, sort of come from the recent sharp rise in energy prices. And you've got to remember that it's not just about when inflation rises or where inflation is rising for currency markets, because inflation is rising across most of the globe at the moment, driven in large part by these energy prices. But it's also about which central banks are going to respond to inflation and which aren't. Now, the Fed, markets have, starting to strongly believe that the Fed is going to be quite proactive now in responding to the inflation. Money markets now predicting with pretty much certainty that there's going to be at least one hike from the Fed as soon as the end of Q3 2022. So that's less than 1 year for the first hike from the Fed. But the BOJ, I mean, pretty much nobody thinks the BOJ is ever going to hike, really. I mean, they haven't they've had rates at zero for decades now, and inflation will probably rise a little bit in Japan, but still, inflation in Japan still appears to be dead in the long term. So you're going to see a further divergence in central bank policy, and that is basically the main reason why you've seen this divergence in rate differentials, which has driven this higher. Another thing though is, and this is related to the energy, the surge in energy prices. Aside from that, the implications that has on inflation and central bank policy, you've also got to think about trade deficits and trade surpluses and basically terms of trade. Japan is a big net importer of energy, whereas the US is actually a net exporter of energy. So higher energy prices are going to improve the US terms of trade, but make the Japanese terms of trade worse. So that's also something that has been pushing dollar yen higher in recent days. So yeah, things are looking interesting. Very much from a technical and fundamental perspective, things are looking bullish for dollar yen. Look at these moving averages, 200, 50 and 21, all pointing higher. And, you know, I wouldn't be surprised if we saw a bit of consolidation, because these moves recently have been big. But broadly, the trend, I think, is towards dollar yen moving higher over the next couple of weeks and months. Hope you enjoyed the video, guys, and I'll see you all in the next one.